Hey, good morning everyone, and welcome to the PivotBoss Pre-Market Report for August 18th, 2016. I'm Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. In the previous session here, what you saw was price came down and dropped below the previous session's low, got to a low near the 65 halves, and then below the previous week's low here of 67.75 began to hold just modestly until it popped above that zone. Once it popped above that zone, that was a failed range expansion below the previous week's low, and that paved the way for a steady rally back toward 2181, and now that's around where prices are right now. Typically speaking, when you form this type of significant tail here in an uptrending market, the early pullback is to be defended for another potential wave of strength, perhaps to new highs. So we're going to be watching to see what happens here off of 73 half. As low as 73 half, you don't really want to see price get much lower than 72, 73s. And from there, bulls need to step in and begin an upward pursuit here. So we're going to be watching to see how this continues to play out. But obviously what we've mentioned here is we've seen one-day pullbacks as a theme here. We have one 2-day pullback here, and the last one before that was a month prior. Everything else has been a 1-day dip followed by a 1 or 2 or 3-day upward move here, and we continue to be near highs and be quite strong. So with yesterday's rejection, today appears to be one of those days where you look to see how far we pull back in early morning trading. From there, look to defend, perhaps near 73 half, as low as 72s, and then look to carry prices back toward 2185 and perhaps through 2190 and into 2200 over the course of the next several days. On an intraday basis here, something I wanted to talk about was how precise it was the previous session based off of the key levels here. So if we take a look at this on an intraday basis, here's the impulse range that we formed yesterday pre-market. This impulse range 2181 down to 2173 half. We began to break this downward, and we had two downside targets we were focusing on based off of that key range. The first one being 69.75, the next one being 66s. You can see right here, price got just below 66s, popped back above, and held. And when that happened in our trading room, I said that could be the low of the day, but prices need to get back above 67.75. That being the previous week's low price, and in holding below that 67.75 and then popping back above it, that was an indication of failed range expansion. Look how price rallied, came back, sat on these levels, and eventually just closed right near the top of that range here. Very important how price played off of that key range, but it was instrumental throughout the session. Now what we have for today, you have to keep in mind here that prices could be a little quiet today after yesterday's aggressive down move, then reversal. So again, pullbacks here into 73 half, which is right near the previous session's closing VWAP. That area right there could be a great area to defend on multiple passes here until it proves otherwise. So continue to look for a defense near 73 half. First shot at bringing this thing back up. Look to scale along the way. And should more returns to that area be seen, you got to continue to defend it until proven otherwise. All right, let's take a look here at crude oil. Crude oil has been on a very, very bullish upward ascent ever since failing to see another slam here. That's a very good teaching moment for next time. You're going to continue to remain in a downtrending path seeking newer new lows until it fails. Once it fails to do that, you see a lower high turn into a higher low. That is when a major counter trend move can occur, and that's exactly what occurred in this case. We're likely rolling over contracts now, so you see a little bit of a gap up here, trading 47.80 right now. This is very important. We talked about it before. This is value here, 45.60, 45.88. We've been chopping around a little bit. Now we're going higher. As soon as we find some sort of rejection, perhaps 48 or 48.79, that could lead to another return back across this range. But right now, this thing appears to be headed back toward the top of value, which is 50.17. So the next pullback could be a solid buying opportunity for another squeeze. and we have to continue to watch for signs of weakness. Right now, all pullbacks have been buying opportunities in crude oil. Looking at this thing on an intraday basis, let's bring it up. PivotBoss intraday right now. Here it is. Very bullish advance again. Again, this could be a gap based off of the rollover here, contract rollover, but again, pullbacks to be defended. Here's the current overnight low. So if you see any move into 47.20 to 47.25, that could be an area for bulls to defend and push this thing higher. So every rotation higher pullback is going to be likely an opportunity to defend and squeeze. Any failure to hold back above 47s could open up a return back across the range toward 45.88. All right, let's take a look at gold futures now. Here's gold. Something we talked about in the previous session with gold was just how it was holding right in the center of its key range. And while this behavior here with bears defending that 62 half that we've been talking about tells us where the bears are positioned, price hasn't been going in that direction. It's been defended and held on the bottom end near 1340. And what I mentioned before was that this thing is still coiling up significantly here. You can see that it's really coiling around the apex of the range. There's just a lot of pent-up energy right here, and that could explode in either direction. And the more that bears come in to defend this zone without getting paid, the more likely it is that the stops get run. So right now you have to be very careful of stops above 65 or perhaps 70. Any push through that zone could really open up an upside push to 1390 and 1417. Any failure to hold above 1334 opens up a return back toward 1310. And again, that zone has been our area to defend as bulls. So right now, really not a whole lot to do. I started the week saying that bears are clearly defending 62 half, but they haven't been getting paid, which means their upside buy stops become at risk. All right. Lastly, let's take a look at the NQ. The NQ has been quite bullish. Really not a whole lot to do right now other than this thing is just going up. And every time we dip a little bit, it's an opportunity to buy for the next few days. We dip a little bit, you buy, right? We had a little bit of a dip here to begin the week, and now we saw the tail come in yesterday. One thing I told our traders in the trading room was watch 47.65. That level was very similar to this 46.80 that we called out before. 46.80 was a great area to buy. I mentioned 47.65. If we see that zone, it's a great buying opportunity for the next push up. Prices came very close to getting 65s, getting into 72s yesterday, and then formed a tail and rallied. So now this midpoint here becomes a very important point where bulls tend to want to defend throughout the session for a shot at seeing a continuation over the next several days. That midpoint again is going to be 47.90. So 47.90, today's low is 47.93 half, so there's still a little bit more to get into that midpoint, but in this area is generally where bulls want to defend for a continuation. If there's any failure to hold that zone, you may see a retest of 47.65, and again, bulls want to keep that area bid as much as possible. Otherwise, a failure to hold it opens up a return back toward 46.80 to 46.90. On the upside, if we do see strength, as we expect has been the case, we could be looking at a continuation toward 48.72. That could be a very solid area that you see this thing rally toward. And again, we have several targets up here on a longer term basis that we can pull out as well based off of some of these key range metrics. All right, lastly, let's take a look at the intraday time frame for the NQ. We've been quite bullish off of these lows. You can see down here, held outside the third standard deviation of our PivotBoss bands. That led to a rally across the range. That can typically be the case in the right scenarios. This major shakeout leg here also led to a continuation higher. So all pullbacks being defended. We're talking about a midpoint of the previous session here, which puts us somewhere around 47.90. Again, that's going to be an important area where bulls want to keep bid. Somewhere in this area, you can see how thin it is. 47.87 to 47.92 is a good little zone here. So if price drops into that area, bulls want to keep it bid. Otherwise, a failure to do so opens up a retest back toward lows. All right, that's it for now. Let's see how this thing plays out the rest of the session. Good luck and trade well.